People get denied for all sorts of reasons. When during the process they get denied, that's really the important part. If somebody does not qualify for a particular loan amount or a loan program, um, it's not necessarily a bad thing if you know that before you're too far into the process. That's kind of the point of a pre-approval. Why some people get denied, um, you know, midway through the process when they're already under contract to buy a house or they're halfway through a refinance. That can kind of land in one of two categories. It could be the fault of the loan officer, who didn't do their due diligence properly. They didn't properly qualify the customer, or it could be the fault of a customer. Maybe somebody quit a job. Maybe somebody went delinquent on a debt. There's all sorts of reasons that this can happen. So how to avoid it? When you are looking at the second camp, right, reasons that a customer might get denied that is sort of in their fault. Let's just say, um, don't make any financial changes during or before loan application, right? Don't make any credit decisions. Don't finance anything. Don't buy furniture. Don't buy a car. Don't spend money and liquidate, drain an account. Keep everything pretty much exactly the same as it was when you initially applied and you were pre-approved. How do you avoid getting denied, for reasons that are beyond your control? Really, that comes down to selecting who you work with. Um, what I always say is garbage in, garbage out. I tend to be extremely thorough when I'm initially speaking to somebody and I'm initially doing an application and a pre-approval for them. And sometimes it's a little bit annoying because people ask me, why do you need all this stuff for me? You're just doing a pre-approval. And I explain to them that we do this so that you don't have to feel the pain later. Because I've heard horror stories from real estate agents that I work with, where somebody maybe didn't do a very thorough job. They kind of breezed over the pre-approval initially. And then halfway through, once they've already selected a house, they're under contract, they've got inspections, appraisals, they're into the deal for, $5,000, $10,000 in deposits, $1,500 in inspections, appraisals, all of that good stuff, and all this legwork and effort. And something, they finally collect all the documents. Something is on there that throws a red flag and that makes them ineligible for financing. And the deal dies because of something that could have been discovered before anybody spent any time. So, thorough pre-approval. Make sure you're working with somebody. When you get a pre-approval, if your loan officer is not asking you for essentially everything but your blood, that should throw a red flag. You know what I mean? Like, you should be providing 2 years of financials, probably tax returns, proof of funds. It's overwhelming. You know what I mean? You should be shocked at the amount of documentation that somebody's asking you for before they issue a pre-approval. If you have a quick conversation with somebody and they do like a little credit pull and they say, okay, you're good, here you go, that should throw a red flag for you. They're not doing their proper due diligence, and maybe everything's going to be fine. Maybe it's not, but they didn't do a proper deep dive. It's like if you go to a doctor and they diagnose you with something or tell you that you're healthy without doing any tests. It should be concerning.